Yeah, the deal basically, it sets core gaming with a $160 million valuation, which, again, was substantiated by a third-party valuation that SYTA had done. And it will see ultimately a 90-10 split, meaning the SYTA existing legacy shareholders of SYTA, today's shareholders of SYTA, as of the record date, which will be the date that the transaction closes, will be retaining 10% of the post-merger equity of the company. And so being that core gaming is valued at 160 million, that means that they will be retaining $16 million of equity of what will be core gaming, or SYTA. And so, I think that's also a very strong value proposition for shareholders, because right now, as you mentioned, the stock is trading below that. And so a dividend will be issued, essentially giving them additional shares to top them up to that 10%, or $16 million.
Okay, but at the minimum, they're going to have 10% of the.
At the minimum, exactly. So for example, if the stock were at the time of closing appreciate to 32 million, then their ownership structure will be double that, right? It'll be 20%.
Okay, so no, I mean, look, it's very compelling, again, because post closing, this thing should be valued. I mean, if you're doing 80 million in revenues, you got the growth rate very similar to App, it should be valued. It doesn't maybe not 20x, but even at 10x, even at half of that, which many fast-growing tech companies are valued at 10x revenues, right? That's pretty common these days, especially the market's relatively healthy right now. So at 10x revenues, again, 800 million.